I know buyers are feeling the squeeze. They are feeling the squeeze with the higher mortgage rates out there. They're feeling the squeeze with the level of inventory that they can choose from. There's so many things that are impacting the buyer community right now. Well, I was just reading an article that I decided to summarize for you as well as overlay my 15 years of experience with regard to what the article is sharing out. And the article is from the National Association of REALTORS, NAR, and it talks about that squeeze. Now, what we see right now in the market is that more buyers are coming in the market. I guess, the sticker shock of a mortgage at 7.5% has really kind of eased, and if you're not able to be in the market, you're just not able to be in the market. But some buyers are saying, I'd rather get the home I want, and you'll see one of these as the later points. I'd rather get the home I want now than to wait and, not get the home I want kind of thing, or just to wait and play out the market. So we'll talk about that to some extent. But for the most part, buyers are feeling the squeeze, and this article covers 6 techniques or 6 things that you can look into or consider when purchasing to see if you can actually move that mortgage rate needle more to your advantage. Okay, so the first one is that they talk about is shop around. So we know if I'm going to get anything done with regard to my house painting or my lawn care or landscaping project or anything, I'm going to shop around. I'm going to go and get multiple bids to see which bid is the better. But the best thing to do when you're doing that, of course, is to make sure you're comparing apples to apples to apples. So for every contractor you have come out to do a bid on a project, you can't change the variables on him. You can't change it, or you will not get the best apples to apples to apples comparison. So what I recommend is 2 to 3 lenders. Give them the same specific specifications, give them the same amount. Sometimes I even ask people to write it out. Give them the same specifications, make sure they're working with the same information, and then basically go around and quote unquote shop around for the best loan for you. And you won't know that you're getting the best loan unless you're really identifying the terms, the fees that they're going to charge you for getting this loan, as well as any rates, any type of rates they're going to charge you for parts of the loan. So getting in that behavior of 2 to 3 people out there, I'm going to shop around, shop my loan. And a lot of times people, like I said, will ask me for recommendations, and I'll give them 2 to 3 lenders. But I also say, if you have a referral relationship from someone that you know, a coworker that you trust, a family member, seek them out too, as well as if you have a banking relationship with a local bank that has a in-house lender or something like that, or in-house lender, then basically reach out to them as well. It doesn't hurt anything. But take 2 or 3 of those lenders and move out and shop the loan. Do not be ashamed to shop your loan, okay? It's nothing. This is what people do in order to get the best long-term savings on their mortgage, okay? The next thing is be prepared to negotiate. So when you think about negotiating with a lender, it's kind of scary, but at the end of the day, you are the consumer. You can basically talk to these people and determine if there's any points or anything that can be variable or negotiated during this time. Some of the things that come top of mind are the closing costs or the fees that the lender is charging as part of the loan. Now, one of the things I do believe in is you get what you pay for. So if it looks like it's free, you're getting nothing. And you may be putting yourself at risk. You just don't want to go with the bottom of the barrel type of lender. You want a lender, when you're negotiating with them, you want to negotiate, but also you want to also negotiate the value. Look at the value the lender provides you. If they're going to be there, if they're going to show up at the closing, if they're going to be answering your phone call, all of those things are things you want to talk to them about that could be a part of the negotiations. What I thought was interesting here is, just as any buyer will try to negotiate the list price or ultimately to get the best purchase price for the home that they're looking for, this is a good time to negotiate as well. What am I getting for the from my lender for what I am paying them? Okay, so closing costs, like I said, are a negotiable item. And so depending also on the type of lender that you're working with is the flexibility. So when you're working with some of the more institutionalized big name lenders, sometimes their policies and procedures don't allow them to be flexible, but sometimes your credit unions or your military affiliated type of lending institutions, they may have more flexible flexibility to work with you. So go ahead and try that out. The next one is buying down a mortgage rate. So when you're thinking about buying down a mortgage rate, that means you've been quoted a rate, and now the lender is saying to you, you may be saying to the lender, I like to consider buying down that rate. And what you're going to be doing is putting really much hard dollars, cash, in order to buy your rate down 1/4%, 0.5%. So as much cash as you give, the lender has their equation for the amount of cash you give, how much of the rate you can buy down. If you choose to take that route, understand you're giving cash. So a good way to look at it is I'm investing cash into my current rate to buy down my current rate. And what the lender is going to be able to tell you is they're going to be able to tell you the return on your investment. And what I mean by that is if you're going to pay $5,000 to buy down a rate, or $3,000, any number out there, right? To buy down the rate, you want to find out, when will I break even? Like if you amortize that $5,000 and I'm going to save $200 a month, you know what I mean? And that $200 multiplied by 12, multiplied by 5 years, however you want to do it, you basically are going to be looking and saying, when will I break even? When will I get when will I break even with the $5,000 investment that I made? Okay. So there's math in that. We can always talk about it. But with that said, if you are only going to stay in the house for 2 years and it's going to take you 5 years to get that money back, you have to think, is it worth putting in $5,000, right, to get a benefit that's going to pay, that I'm going to break even in 5 years and versus 2? Then you're going to basically want to say if this is really a good investment for you to make. So understand, the shorter the window or timeline of you holding that home, the less appealing a large buy down will be to you, right? Because you're giving more cash that you may never see again, or you won't have the benefit of. The article goes on to talk about asking for discounts. So a lot of times when you go and sign off on your loan and you're about to close, a lot of banks automatically offer, if you do it by electronic fund, if you make your payment every single month by electronic funds transfer, if they can set that up for you, they'll give you a little bit off. But the other part of this bundling your service, or asking for a discount rate, I should say, is coming with the concept of bundling your service. So when you think about bundling your services, you are currently with a bank and you have your car loan with them, you have a rental property, you have all kinds of assets or all kinds of investments with that bank. That'll be a good opportunity to go to them, because you have so many things vested with that bank, to say to them, I have a strong relationship with you. I currently have this, that, and the other that you're holding, and I would like to consider, will you be giving me, can I have, or would you consider a discount on this loan? And the power play for that is because you've already done your 3 or 4 quotes, right, from lenders. You already have that information. So now you'll know whether you're getting a significant or good enough discount on your loan. You won't really know the value of it if you're just asking blindly, can I have a discount? But with regard to having an existing banking relationship, and if you already have different financial vehicles with them or terms with them, it doesn't hurt to really ask them. And it plays out very well when you think about smaller institutions that have more flexibility to respond to the needs of their clients. So when you talk about those big institutions, they may not necessarily have the ability to make exceptions for you or help you in that kind of way. But for the most part, it's good to ask for those discounts. The other one is float down feature. I love the float down feature. It's very, very popular. I remember maybe a couple years ago, it was just coming into vogue again, kind of thing. But the float down feature that I like is that in a moving mortgage rate market, you'll go out on day one looking for a home and you'll lock in the rate. You like the rate you were given when you spoke to your lender. You'll go out and you'll be looking for a home. And then all of a sudden, 15 days later, you're under contract, and all of a sudden you find out that you've locked in your rate, but now the mortgage rates have changed. So they've changed on you and you're now thinking, and they've gone down, which that's the rate you want, that lower rate. And so it's nice to have talked to your lender beforehand to see what policies or procedures they have if the rates were to float down. Because if you have a higher rate, you want to float with that lower rate if the market changes. And so a lot of lenders will go ahead and specify that for you. And I just think it's a great feature when you have a market that is adjusting high and low. 25 basis points is significant, so if you can meet the market and flow down with that and get your loan locked in at the new rate or definitely close at a lower rate, it's all the better, right? So talk to your lender about that. Consider the mortgage term. Term of loan is, you typically hear 30-year loan. And so FHA back about 4 months ago, 5 months, maybe May, they basically talked about or implemented a 40-year mortgage, right? So of course, if you're doing a 40-year mortgage, you're going to pay more interest. You're going to have you're going to pay more interest over the loan, but also what it may help you do is have a more manageable monthly payment. And that is probably more what you're looking for than the actual interest. When we talk about interest rates, what you're looking for is a mortgage payment that is that you could tolerate and work, right? And that won't strain you on a day-to-day basis. So for having a longer term in your mortgage rate, going from 30 years, which is the typical mortgage most people get, to a longer 40 years may help you in terms of amortizing your loan for a longer period and ultimately have you lower a longer repayment period. Now, the other thing to help you out if you're able to do it is to consider, maybe even a shorter term, 20-year term, 15-year terms. You have to understand is when a lender is exposed for a longer period of time, that's what you're paying for. You're paying for that risk. So in order to mitigate their risk by having you out there longer owing them money or owing money in the market, they basically are saying, hey, you got to pay us more interest in order for us to secure a longer term loan for you. But when you contract that to maybe a 20-year or 15-year mortgage term, then excuse me, you're going to see a lower interest rate. Typically, they're going to show you a lower interest rate. So if you're able to, you may go on there, you may have been accustomed to talking 30-year terms, ask them what the difference would be if you were to go for a shorter term. And it may be very nominal. You may be sitting on $100, $200, $300 disposable income that you can afford to do that. And the benefit is in the long term, you'll pay lower interest on that whole loan. And then on top of that, you'll be done and have paid your house off in full a lot sooner. So considering that, you do have different products out there. You have adjustable rate mortgages out there. And the adjustable rate mortgage is really neat because it gives you a lower interest intro rate, an introductory rate to your loan facility that you're getting. So if you're borrowing money, the adjustable rate mortgage will give you a lower interest rate on the introductory rate. But that rate has terms which will cause it to adjustable rate that will cause it to adjust over time. So what you want to be prepared for is that ultimate adjustment. So a lot of times you'll get an adjustable rate, or a lot of times owners will have an adjustable rate mortgage. They love it. And then they'll get blindsided when that rate does adjust, and whatever index that rate is set at, if it's really aggressive or that margin that you've agreed to is really, really significant, it can blow some homeowners out of the water and it can really impact your month-to-month household budget. So you want to be aware, you can even ask the lender to kind of project or give you some projections, if this, then that, so you'll have an awareness of it. So adjustable rate mortgages are coming back in vogue for some. Really figure out if it's worth the ultimate risk if you're not disciplined enough to track it and really follow it and really to see what impact it may have over you in the next 5 to 7 years. The other thing that I wanted to bring up personally is this watch and see. A lot of buyers want to time the market. There's so many mixed messages out there that will that play into a buyer's mind. So if a potential buyer is saying, I want to buy, and they're hearing that, okay, the housing prices will fall, for example, or something, that the housing prices will fall next spring, they may hold off, right? But understand that in any equation, once you change a variable, the equation changes. So if we are talking about this current market that we're in, which we say is still in a lot of areas a seller's market, it's a seller's market because of the level of inventory, right? But sellers now are trying to accommodate the fact that I can't have my price really high and get a viable buyer because the buyers are also restricted by the mortgage rates. So there's a lot of variables that make the conversation go in one direction this season. If you're waiting for homes to go down next season, there are going to be other variables weighing in on that, right? It's going to be the interest level, the interest rate, the number of homes that are out there to select. So in the article, they do reference this one little tagline you hear now, and that is marry the house, commit to the home. If you like a home and you can afford it, it won't put you in the poorhouse or anything like that. You won't be eating rice and beans forever. If you can afford that home, jump on that home and then just date this rate over here, which means, hey, you know what? If the interest rates were to go down, your mind is already saying, I will go ahead and refinance this home. But in the refinance conversation, I would honestly say in this current market with everything, if you're going to jump in this home, into this market right now and buy a home because you love it and you're going to commit to that home and you're going to basically adjust, refinance later, just make sure when you're refinancing, if you can, don't take any money out. Don't take any of your equity out. Refinance, run the course so that you can have the full benefit of owning this home at some point, or when you sell it, then you can take your equity at that point and parlay it into something else. But at the end of the day, I love this article for you with regard to mortgage rates and little strategies that you can consider to knock off a few points here and there on the mortgage rate that you're quoted. My name is Reatha Butler. I'm broker owner of Ashley Garrett Residential here in Colorado. I'm here to help, and more importantly, I'm here to help you real estate confidently in any real estate market. If you have any questions, feel free to reach out to me. You take care, okay? Thanks.